What's happening, guys? Can you let me know if you can hear me before we get started? Can you guys hear me? Cool. All right. So today is just a live stream, basically, like I mentioned a couple of times. Just want to jump on board with you guys and do some live streams. So when certain things happen in the market, I can jump on and basically we can talk about what's been happening, what's happened today, what's happened yesterday. But on a weekly basis, if we make it a little bit more regular, or as often as possible, I'll jump on and have just basically a live stream, just talk about various things, talk about whatever you guys ask. We can talk about psychology, we can talk about anything really. So yeah, ask some questions. I'll go through a few of the charts that we were looking at today, but yeah, ask me any questions that you want and I'll pick out some questions and go over some stuff. This week has been a little bit of a pain in the ass so far. Really quiet yesterday on Monday and Tuesday, which I expected because there wasn't really much fundamentals out, but I think we're going to have more trades tomorrow and Friday. So today there was some movement, but it's quite choppy. So I hope you guys can understand that there's only so much that I can do when the market's dead. So someone just said, Jazz Williams, what was one of the toughest and bad habits you had to learn to break? Let me see. And how did you break it? I spoke about this before. One of the worst habits, and I think one of the worst things that a lot of people do is over leverage. For myself, in the early years, the first couple of years, I mentioned this before, I used to trade very small and trade very well and win, say, 8 out of 10 trades. But as soon as I'd start over leveraging and step up my sort of lot size, that was too big for my account. Everything would go out the window. My emotions would be all over the place. My emotions would be all over the place. My psychology would go out the window. So sorry guys, I'm just reading some of the comments. So yeah, one of the biggest problems I had was over leveraging. Once I got it through to my head to stop over leveraging and to start just using the 1% rule that I've given you, or 1 to 2% per trade, that's when everything changed for me. When I really got strict with myself and decided I'm going to stop messing around, stop over leveraging, stop trying to make a quick buck, or trying to hit the jackpot with every trade and try and make the money back that I'd lost. When I just drew a line under the money that I lost before and just trade right, trade quickly, to my plan, that's when things changed. Hey guys, I don't know if you can hear me now. There seems to be a problem. I'm going to see if we can get this back up and running. Can you guys still hear me at the moment? Okay, I'll keep talking for the moment and see if the stream comes back on. Otherwise, I might cancel this and then start a new one. Just talking about the 1%, somebody just mentioned, what do I do if I have a small account? 1% will barely make me anything. Now, this is the problem that I had when I first begun, and I think this is a problem that a lot of people have. Because when you've got a small account, that is exactly the problem. You're over leveraging your small account to try and make big money, or trying to make too much from one trade. No matter what size your account, even if it's small, you have to just trade at 1%, and then that will keep your emotions in check and keep your psychology correct. No matter if it's £100 account or £1,000 account or 100,000 or 1,000,000, you only ever use 1%. Once you can get yourself making consistent returns and winning the same amount of trades month in, month out, then you can increase your account, or you can put deposits on more money in. But if you are trading a small account, and especially a small account, and then you use, say, 5, 10, or even more % per trade, then everything's going to go out the window. It's a surefire way to blow your account. So no matter what size your account is, you have to stick to the 1% rule. Someone said that they gave back all their profits from August. That's because it sounds like you had a good month in August, but then you probably had a really good month, got too overconfident, started thinking that you can win every trade. And you have to remember, the reason that we have risk management is because if you don't have risk management, it only takes one trade to blow your account if you don't have risk management. So remember, no matter how good you are, you're always going to lose a trade. So if you don't have risk management in place, that one trade can ruin you. So you have to have risk management. You have to keep trading the same amount on every trade. You can't just have 10% of your account risk on one trade, 1% on another. You need to keep it very regimented and very strict. 1% on every single trade, and have some patience. Let it build up over a month, and then see over a month how many % that you're up at the end of the month, or at the end of the week. Give yourself some time to grow as a trader. Trading 1% opens your eyes to what you can do in the market, how many pips you can get, and also it just helps you learn how to hold on to trades, how to be a swing trader, and yeah, as I said, it grows your confidence. The more trades you're winning, then the more confidence you have. Can you all still hear me okay? Because I think that the video has stopped. Can you see me? Because as far as I'm concerned, my screen has actually paused at the moment, so I don't know if you can see me, but I take it you can hear me. Okay, cool. So there's certain things that I want to talk about today, which are just answering your questions. The educational webinar is going to be next week, I believe it is. I think last time it was on the 20th or the 21st or something. So there's an educational webinar once a month. So the last one was the trendline strategy, which all you guys loved. So we're going to just touch on that slightly again, and then I've said to you a few times, the first webinar was foundation level, which was resistance and support and monthly levels. Then the next stage, which was trend lines, finding the direction and understanding. And then now we're going to add on more. We're going to do Fibonacci's, all sorts of stuff. Candlesticks, we're going to have one, and specifically looking at candlestick formations, different candlesticks that we look at, and understanding how to use them. So the educational webinars are going to come, but this is a live stream where we could just jump on, answer some questions, and even talk about some of the trades that we're looking at today. I can jump on and put GBP, JPY that we were playing around with today, and have a look at some pairs before tomorrow. Yeah, I'm going to do some chart work, but I'm here to answer some questions and talk about some specific topics. A lot of the questions here that people are asking are questions that a lot of people want to ask. So yeah, ask away now. We'll look at some charts. I'll do an evening call as well. We'll look at some charts and try to understand what's been happening this week with the choppy trades. Someone saying, any advice for trading alongside another job, e.g. when you were working on properties? So yeah, basically it's hard. It's hard when you're not working or doing it as full-time, or when you're doing a full-time, when you're not working, or when you're not trading full-time, when you have to have a job. I started out like that. I'm sure that most of you still are. But the way that I done it, and kind of one of the reasons that I do the evening call every night at 10 o'clock is because that's when the daily candle closes. So if you are in a job and you're working 9 to 5, it is difficult, but swing trading is the only way to actually be able to trade if you are in a 9 to 5. But obviously then sometimes it's hard because you want to get entry throughout the day. But my sort of method was every day at 10 o'clock was, for me, is the key moment or the key time to trade. So at 10 o'clock, you spend an hour or however long it takes you analyzing the charts. So you look at the daily candlestick, you look at the 4 hours and everything, but mainly you're looking at how the daily candlestick closes to give you an insight on the next day and understand what might happen the next day. So I analyze every evening at 10 o'clock, and I get prepared for what I think is going to happen the next day. So obviously in the UK at that time, go to bed, the Asian session happens, and sometimes you might place a trade before the Asian session, but if not, I wake up very early in the morning, 5 o'clock. If you're working in a full-time job and you want to make trading work, sometimes you just got to put in the hours. You got to wake up at 5 o'clock, 6 o'clock latest, but you got to wake up at 5 o'clock, have a look at the charts, be ready, get ready for work, take a look at the charts, see if any of your sort of setups from the night before look good. If they do, then maybe you might be able to place a trade before you go to work at 6 or 7 o'clock in the UK session. But the key thing is, if anything's changed during the night in the Asian session, you can check your charts in the morning, make any adjustments, but then when you go to work, when you have a break at work or during the day or at certain times, like at 10 o'clock, you can check the charts and you can have a quick glance at them and see what the charts are doing. You don't need to analyze and start putting on trend lines and putting on Fibonacci's. You know what you're looking for because you've done the analysis the night before. So you just keep a quick glance at your phone or at whatever it is, your laptop, during the day. It should only take you 10-15 minutes. Everyone has a break during the day, so you can keep an eye on it. You can keep jumping on it, have a quick look, And when the market starts moving into your direction for what we have planned, then you can take the trades. Somebody said, what account size did I start with? Years and years ago, I started with £1,000 and worked my way up from that. Okay, let me bring up some charts. I'm going to bring up some charts. Just let's talk about GBP, JPY, and we'll talk about a couple of trades that we've been looking at today. So the sort of reasons of the live streams are to jump on and basically talk about what's happening right now. So each week when I jump on, we can talk about what's happening now and what's been happening over the last few days. So okay, let me know if you guys can see my GBP JPY chart. Okay, 1 second. Okay, it should come up in a second if you let me know if you can see it. Okay, cool. So let's just talk about GBP JPY. So it's been a bit of a pain in the ass this week trading. It's taken a lot of patience. At the moment, short, still looking quite good, but let's just clear this away at the moment. So we can just see exactly what price action is showing us. So we can see exactly what's happening. So GBP JPY. So monitoring this one today. Well, over the past few days, we've had this really big push up on the pound, as we've seen in the last week. Big push. But we haven't really had much of a pullback. So we hit this 132.50 level and pushed straight through that. But then this week has been very quiet. We've just seen a little push up higher, and then I started to notice this morning that the pound, not just on GBP JPY, but looking at the GBP on a few different pairs, we could start to see some weakness. So here on the 4-hour chart, you can see here this reversal sign that we always look out for. This is something we'll talk about in the educational webinar when we do candlesticks. 1, 2, 3, this evening star formation. Now it could have been a bit more stronger here. If this was completely broke straight down to the bottom, was a complete bearish engulfing, it would give us more more of an insight that we're going to push down lower. But nevertheless, this was a nice sort of reversal sign. So you can see price has broken up through resistance, sort of started to slow down here. But on the lower time frames, what we could see here was this sort of hanging man. We came up here, price pushed down, pushed back up, sort of had this hanging man. I was watching price just staying away because we were quite choppy. Then we had this really nice 1-hour bearish engulfing. This was a nice sign, engulfing, coming down to sort of fill this wick, engulfing the previous 2 candlesticks here. And at this point, there's a little bit later than what we normally like to get in sometimes, but you can see this really nice 1-hour bearish candlestick. So this is just understanding and reading price action and seeing what it's showing us. So here we had a really nice 1-hour candlestick. and I updated the group when we were here. We saw price push back up, but then we started seeing price come all the way back down. So it showed that after this big bearish candle here, that the bears were putting the pressure on and pushing us all the way back down. So we looked at taking a short trade. Initially, it was around here. So now, today just been very, very choppy. We pushed down from here, came down to what this level was, 1.3270, 80, 90, 95, about 30, 25, 30 pips. Came back up then, took us out at break even, pushed back down, pushing back up. It's just all over the place at the moment. So I'm going to sort of stand aside, especially as we're coming into the Asian session, and this is a Japanese yen pair. So little things like that you just got to keep in mind. This could start becoming volatile during the night for people that are in the UK, and it's not something that you want to be stuck in with this moving while you're not able to watch it. At the moment, we can see we're in a very, very steep sort of uptrend. As I've explained before, the steeper the trend, the more likely it is to break. But just because it breaks like this doesn't necessarily mean that we've actually broken trend. We do have to come back, as always. As I always say, we have to pull back in order to push up higher, like we did. So again, at the moment, I'm watching GBP JPY, expecting sort of a bigger pullback at the moment, because we haven't really had much of a pullback. So whether it's going to be for a couple of hundred pips, if we can break through 132.50, we could come down lower, possibly even down towards the second point of this trend line. But at the moment, we've broken through, and I would have wanted to see a little bit more here. So we're just zooming back into the 1 hour where we broke this trend line. I would have wanted to see a little bit more. This nice bearish breakthrough, strong 1 hour bearish breakthrough here from the trend line is what made me believe we're going to keep pushing down lower. Now we are trending down lower ever so slowly, but there's just not enough in it at the moment. The market's too choppy for us to be stuck in this. We don't know how long it could continue to be like this. We are also making a pullback as a retracement, a sort of a flag formation. So we clone that, and we just use this as a sort of tool just to understand the sort of flag formation that we're in. And now if we can close and break above this, then we can see price push up to the upside. So I'm staying away from this at the moment, and as it's just very, very choppy, it's just too choppy for us to want to get involved in. Let me just quickly look at any of the questions. Can you still hear and see everything okay? Okay, cool. So yeah, GBP JPY currently, if you just zoom out here on the 4 hour, remember 4 hours is very, very good for the direction. And then we drop down to the 1 hour for to look for entries. But at the moment, this does look like it could go higher. As we're pulling back, you can just see we're making higher lows, and it looks like we're making a new higher low here. And I'm going to stay away from this thing because it does look like we're going to push back up to the upside. And I'll be looking at it when it gets back to sort of these levels here. So someone asked me today why I sometimes cancel trades. And the reason being is because when one of the very, very important things about trading is the cross-referencing. So like I've explained to you before, if you're taking a trade on GBP JPY, before you take that trade, you want to check how GBP is behaving against other pairs like GBP USD, GBP CAD, anything else that the pound is against the major pairs. So you want to see how it's acting. If you can see that the pound is weakening across lots of pairs, then you can see that a bigger move is coming. So, for instance, today we saw a big bearish candle on GBP JPY. We saw that GBP JPY was pushing down. We also saw that GBP USD started pushing down, and that's why. Let me just see if I can flip this over for you guys to another. I'm just going to put on Euro GBP. Just let me know if you can see Euro GBP. Okay, cool. So you can all see Euro GBP, yeah? So with Euro GBP, so what I was saying was, when we were looking at this earlier, I initially posted this when we were within this sort of region, this long region that I showed you. It was on the 1 hour chart, I believe. So then what I'm looking at on other pairs, which is very, very important to take this on board, is we were around this price here, and then we started to push up as we saw pound weakness on other pairs. So here we could see that pound was getting weaker. We were pushing up out of this sort of little range that we were in. We had pound weakness, and then along with GBP USD, GBP JPY, we saw that the pound was falling. So then we can see that there might be a bigger move happening. Then when we pushed back, when we started to pull back down, and then we could see that we still had the choppiness with other pairs like GBP, JPY, where we pulled back up. I could see that the bigger move wasn't going to happen. So we had signs that we were going to have a nice impulsive move, a nice explosion, and we wanted to be part of that, where we can get 30, 40, 50 pips, stop loss at break even, and then let the trade continue. But as suspected, any sort of push up higher was short lived, just like on GBP JPY. The bigger pushes down, we saw a nice 20 pip move, then we pulled back, then we had another 20 pip, but it's all sort of just fake moves. There's nothing really happening in the market. Tomorrow we have Euro news, so stop loss should be at break even on this pair now. So I'll just take this away, and it looks like it's going to come back up at break even fairly soon. So I gave an update on this. We were trading around 0.920. We pulled back. So this is when I give out a trade, it's entirely up to yourself. This teaches you how to learn price action, when to take the trade. So we had that pullback. We pushed up, broke above this sort of range, came back, pulled back, and retested at support, and then we pushed higher. But now we're coming back down. So we come back to sort of the top of this range. We'll be back at stop loss at break even, and then I'm going to stand aside. Another thing what I'm looking out for here, and again this is quite very useful to know, is that often before the news happens on pairs, it hasn't really happened with the euro here, but often what we see is the price sort of makes the move either a day or two beforehand. So for instance, we've got euro news tomorrow. So I'm monitoring. I have been monitoring the euro pairs and seeing has there been any sort of sign or any giveaway of what's going to happen tomorrow, because often things are priced in way before the actual event. So like I mentioned before, on non-farm payroll, there's been, as I said, it can get manipulated 2 or 3 days before the actual event, because hedge funds, banks and everybody else are pricing in for what they expect way before the event actually happens. So for instance, we've got Euro news tomorrow, and we had this really nice push up here, 4-hour morning star formation. Great sign that we're going to start pushing up, but then straight away we just pull back down. So it's really shit, really crap sort of price action at the moment. And now back down, just choppy. So I'm going to stay away. Euro might have a nice push up tomorrow, but it seems that that's not going to happen. I think that euro, well, we have to wait till the news comes out, but it looks like euro just doesn't have enough at the moment and could push down lower. But I'm going to be watching out for the news tomorrow. It's about 12:30. So euro pairs are going to be the sort of main ones that I'm going to look out for. And I'm going to be watching out for this. I do expect this to come down and hit us at break even. And I'm happy to be at break even and come out because we have got that big news tomorrow. So what I'll be doing is, let's just say this is out of the way. What I'll be doing is standing back, watching for price action to make some sort of signs and see where we go from there. We might push down. We might try and attempt to break through here and fail, and then we push. Or we might have a little fake push to the upside, and we actually might come down lower. So this can go either way at the moment. I'm going to keep an eye on it tomorrow, and I'll update during the day. Did it go offline there? Somebody's saying, how come you don't let the trade breathe? We do let the trade breathe with having a stop loss. But once we get into a trade, everything is about risk management. You have to, the number one rule is risk management. So we let the trade breathe by having a stop loss. So if it wants to move into the stop loss before it moves into profit, but if you're 30 or 40 and the trade moves against you, you don't want to be holding on to that. If the market moves 30 or 40 pips in the opposite direction, a lot of the time the market is going to carry on in that direction. So it's going to move against you. So if you're long and you're 40 pips in profit and you move your stop loss to break even, the market pushes down 40 pips. You want to get out the market because obviously the market can continue to drop even further. Can you guys hear me still? It seems like it's freezing. I might cut this off and start again.